Have you been watching the price of gold lately? It's been on an absolute tear, hitting some incredible highs. But this isn't just another market rally. It's a signal, a really big one, that there's a massive shift happening in the global economy. We're going to dig into the powerful connection between this precious metals surge and a really fundamental change in how the world uses money.
Okay, let's just start with this number, $3,824.60. In late September of 2025, that was the price for 1 single ounce of gold. Now, this wasn't just a new record, folks. This was a number that absolutely shattered all the previous ceilings.
And gold wasn't having all the fun by itself. Silver, its more, let's say, energetic cousin, had a mind-blowing year. It surged 38% in 2025 alone, hitting a 14-year high. So we're not talking about small market moves here. This is a genuinely historic boom. So the billion-dollar question, or I guess the $3,800 question, is why? What on earth is causing this modern-day gold rush? Let's break down the forces at play here. All right, so what's pouring gasoline on this fire? Well, it really boils down to 4 key drivers that are acting like rocket fuel for these prices. It's kind of like a perfect storm of economic and political anxiety. And these drivers all feed into each other. You've got this stubborn inflation that just won't go away, so people are trying to protect their savings. Then you throw in all the geopolitical tension, which always causes a flight to safety. And get this, central banks are buying gold at a pace we haven't seen in decades, over 1,000 metric tons a year. And for silver, there's a whole other layer. Huge industrial demand from green tech like solar panels and EVs. Now, a price surge this dramatic doesn't just happen in a vacuum, right? It creates a really clear economic divide. You've got some companies that are celebrating record profits, while others, well, they're facing a serious cost crisis. So on one side, you have the clear winners, mining companies. Think about giants like Barrick Gold and Newmont. For them, every price jump is basically pure profit. But on the other side of that coin, you've got the losers. Jewelry retailers are paying way more for their materials. And tech companies like Apple and Tesla, well, the cost to make their electronics and EVs are suddenly going through the roof. Remember that massive central bank buying we just mentioned? That's a huge clue. It points to something much, much bigger than just market prices. It's actually a story about the changing role of the US dollar itself. So we have to stop and ask ourselves, what if all this gold buying by governments isn't just a simple hedge against inflation? What if it's actually a deliberate, strategic move to shift away from the world's go-to currency? And this brings us to a huge concept called de-dollarization. It sounds complicated, but the idea is actually pretty simple. It's just countries making a strategic decision to depend less on the US dollar for things like international trade and their financial reserves. Instead of using dollars, they're starting to use their own currencies to do business. And listen, this isn't just some abstract theory. It's happening right now. A Russian expert pointed out recently that his country's trade in US dollars has absolutely plummeted down to just 5%. This is real-world evidence, especially in a critical sector like oil. Just look at that chart. Do you see that tiny little sliver? That's what's left of the US dollar in Russian oil transactions. Just 5%. The other 95%? That's all happening in other currencies. That is an incredibly dramatic and rapid shift away from the dollar in a huge global market. But Russia is definitely not alone in this. India is also making a major push to use its own currency, the rupee, for international trade. They're actually creating a whole new system designed to bypass the dollar entirely. So how does this actually work? Well, it's pretty clever. First, a trading partner, let's say another country, opens a special bank account in India. Then they deposit their own currency into that account, which gets converted into rupees. And now for the final step. When they want to buy Indian goods, they can just pay directly from that rupee account. The US dollar is completely cut out of the loop. And this whole movement is getting a massive shot in the arm, especially with the expansion of the BRICS economic bloc. When you add major energy players like Saudi Arabia, the UAE, and Iran into the mix, you're creating a powerful network where trade can be settled in local currencies. It directly chips away at the dollar's long-held dominance. Okay, so with all of that happening, what's next? Where do we go from here? Let's take a quick look at the forecasts and what this might mean for the future of the financial world.
Well, the forecasts for gold are still incredibly strong. Analysts are predicting an average price of around $36.75 by the end of 2025, and there's a real possibility of it breaking that $4,000 mark by the middle of 2026.
And the outlook for silver is just as strong, if not stronger, thanks to that almost unstoppable demand from the green energy sector. Projections are calling for silver to hit $50 an ounce. That could even break its all-time high.
So what should you keep an eye on if you're following this story? First, watch global inflation rates and what central banks do with interest rates. Keep tabs on geopolitical stability for sure. And crucially, monitor the currency strength in emerging markets and that industrial demand for silver. These are really the key signposts for where this is all headed.
You know, when it comes down to it, the record price of gold isn't just a headline. It's a symptom of a much, much larger shift. This move away from a single dominant currency toward a multipolar financial system is happening right now, as we speak. So the real question is, how fast will it accelerate? And what will that new world actually look like? We may be witnessing the very beginning of it,